It's Wednesday, the 20th of October, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Australia's big miners get the yips and their share prices fall. That's our main story this morning. Also today, investors and the Reserve Bank can't seem to agree. The wagering sector in a state of flux, and the local wine sector recovers from a horror year. Then stay listening for Sean's chat to Duncan Hogg from EY about the surge in corporate deals at the moment. But first, Sean, Australia may have benefited from the resources boom, but there's a few cracks appearing among the major miners at the moment. Another bad iron ore production result from BHP.
BHP has joined Rio Tinto in reporting lower iron ore volumes for the third consecutive quarter. That's really bad news. BHP also said coking coal production had tumbled, which helps explain why the price of coking coal globally is so high at the moment. Now, iron ore is BHP's most lucrative business, but it shipped 4% less during the September quarter than the June quarter. The good news is that it has received approval to lift production next financial year, but production volumes at all four of BHP's copper mines were lower than in the June quarter, while output of nickel and thermal coal also fell.
Right, I'm going to ask you a pretty straightforward question that I'm guessing doesn't have a particularly straightforward answer, but what's the problem with the miners?
Oh, such a good question, Michael.
Thank you.
Underinvestment is a long-term challenge for all miners, including BHP and Rio Tinto. In BHP's case, the change in direction a couple of months ago away from oil and gas towards future-facing commodities like potash and copper, that'll help address that issue. But there's also a bunch of short-term challenges. Equipment. There's all these equipment failures going on. They're just not working and not being fixed. There's labour shortages, especially in Western Australia. BHP, for example, can't find enough drivers. Rio's autonomous train program has struggled. And then on Monday, the government report into the Yukon Gorge disaster was handed down, and it recommended sweeping legislative changes to the sector, so that won't help.
Okay, so then where does this all land?
Well, it means lower returns for shareholders. BHP and Rio and Fortescue and all the miners should be taking advantage of the big surge in base metal prices. It means less taxation for governments. It's a hugely capital-intensive industry, so there's less spending on capital, but it's not overly competitive once you're established. Higher commodity prices should be able to hide many sins, and indeed it has over the past couple of years. But maybe the sector isn't in as good a shape as we might have hoped.
All right, so with all that in mind, how did the markets perform yesterday?
The S&P ASX 200 finished down just a touch, 6 points, to close at 7,375 points. The technology companies did pretty well, while the materials companies did worse. A quick word on base metal prices. I mentioned this in the lead story then. They continue to soar. Base metals include copper, nickel, aluminium, cobalt, zinc. That's opposed to precious metals like gold and diamonds. The high base metal prices normally occur because the economy is doing pretty well and there's strong demand. This time round, it's actually a supply issue. There's a scarcity of some of these base metals, and that's having a big impact. In fact, the London Metal Exchange Index hit an all-time high last week. In other markets news, Michael, the Aussie dollar is up over the past 24 hours and trading around 74.6 US cents. Gold prices and oil prices also remain pretty high.
And Wall Street overnight?
US equities extended their rally on the back of solid corporate profits. In early afternoon trading, the S&P 500 is heading towards a fifth consecutive rise, which would take it close to its all-time record. European markets were also stronger. And the first US Bitcoin exchange-traded fund launched overnight. Cryptocurrency ETFs have been launched in other jurisdictions, Michael, but not Wall Street. It'll be a key test of whether cryptos are considered along similar lines as equities and bonds. And if they are, of course, they'll attract many more investors.
We'll be back in a moment with the rest of the day's business news. Sean, plenty of stories to discuss this morning. The Reserve Bank released the minutes of its board meeting from 2 weeks ago. It seems to be pretty relaxed about inflationary pressures around the globe, even if investors aren't.
It does, and while investors are now pricing in a lift in the official cash rate, possibly at the end of next year, the Reserve Bank is still looking at 2024. That's 18 months to 2 years later. Bond markets have sold off in recent sessions, pushing yields higher. That suggests investors think interest rates might start rising before the RBA's timetable. There's a disconnect between the central bank and the market at the moment. Investors are focused on price pressures globally. New Zealand's inflation rate is almost 5%. We saw that a couple of days ago. But the Reserve Bank is focused on wages rising in Australia because that's a prelude to inflation. And there's just no sign of wages rising at this point. The bank's minutes said underlying inflation pressures in Australia were more moderate than other advanced economies. We'll have to wait and see how that goes.
All right. Now, what's the latest COVID news?
Well, let's start with Western Australia. It's opening up its border.
No.
Yes, to Queenslanders at least. That's some sort of breakthrough, I think. There have been no new cases in Western Australia or Queensland for a number of weeks now, and so those two states can go visit each other. Down south, there were 1,749 new cases in Victoria. Its vaccination rate is at more than 67%, and the state is due to leave lockdown tomorrow night. Last night, it opened up to New South Wales travellers, so that's quarantine-free movement between the two states, as long as you're vaccinated, of course. The ACT recorded 24 new cases yesterday, and there are 272 new cases in New South Wales. That state's Chief Health Officer, Kerry Chant, said she expects to see the impact of the end of lockdowns in the case numbers by the end of next week. And of course, that's crucially important for both health and economic reasons.
Now, Sean, I mentioned this one at the top of the show, but Tabcorp's revenue has been dragged lower by lockdowns closing the local TAB, and Australians are flocking to online bookmakers.
They sure are. Tabcorp held its AGM yesterday, and it said wagering revenue was down 17% during the September quarter. That's a massive drop. The boss, David Attenborough, said it was time to level the playing field between Tabcorp and online bookmakers. He said his business had to return 40% of its revenue from its wagering division to the racing industry, whereas online bookmakers returned around half of that. I'm not sure of those numbers, but there's no doubt the online bookies do seem to get a better run. There's plenty going on in that sector at the moment, Michael. Remember, on Monday, Aristocrat Leisure said it would spend nearly $4 billion on a real money gaming site. We're waiting for the outcome of the Victorian Royal Commission into Crown. That's due shortly. The Star management faced public hearings after media allegations of dealing with organised crime at their venues. This industry is in a state of flux. There'll be a lot of change in the next few months.
Now, Sean, one of CSL's most promising new drugs is set to start phase 3 trials before the end of this financial year. That's good news.
It's great news. The drug Kcentra treats severe bleeding, but trials were delayed as a result of COVID. The trial on 8,000 people hopes to demonstrate its efficacy in stopping bleeding quickly and, of course, improve patient survival. If you get through phase 3 trials, you're almost at the finish line. CSL now has a number of drugs in phase 3 trials across immunology, cardiovascular and haematology disciplines. The group actually held an investor day yesterday, Michael. It's the country's second largest company. It's worth $135 billion. I tend to forget that. It spends about 10% of its revenue in research and development every year. That's a massive amount. It's about $1.3 billion each year. It has struggled a little bit more recently. Blood plasma collections have been down due to COVID. Its share price rose yesterday, but it's been a significant underperformer over the past year.
Now, there's been heaps of reports about how badly affected the wine industry has been by the tariffs imposed by China. But now we've got some hard data around it. And these are the latest Wine Australia figures that show just how hard those wine exports have been hit. The worst year in a decade.
Sure was. Wine exports fell 24% to $2.3 billion in the 12 months to the end of September. Volumes were lower and the average value of a litre of wine exported also fell. Now, we know the main reason is China and the fact that they imposed tariffs. For example, Treasury Wines, which owns Penfolds, was hit with a tariff of 175.6%. A few other things going on there too. There were relatively small vintages from 2018 to 2020. This year's vintage has been huge, a record in fact, but it takes a couple of years before that shows up in the export statistics. The good news is that outside China, Australia has done okay with rising exports to the UK, Hong Kong, Singapore and South Korea, among others. In fact, the UK is now Australian wine's number one destination by both volume and value.
Okay, Sean, what's making headlines in today's news media?
Well, the Financial Review is reporting that Treasurer Josh Frydenberg believes the population hit from the COVID crisis will hurt the economy, and the size and composition of Australia's migration program is front and centre in his post-COVID-19 thinking. Also, the Australian's reporting that superannuation funds have suffered their first monthly fall in returns for more than a year, as inflation fears hit market interest rates and China's economic outlook deteriorates. The Medium Growth Fund lost 1% during September, according to Chant West.
Running through some of the other stories around today, Deputy Prime Minister and leader of the Nationals, Barnaby Joyce, has agreed Scott Morrison could commit to net zero emissions by 2050 without the support of the Nationals. He told reporters yesterday that the Prime Minister was well within his rights to do so, but the government is determined to present a united front on the issue, which means probably waiting until the Nationals hammer out some kind of policy.
You'd think so. Transport and logistics group Brambles is struggling to find enough pallets to supply retailers as demand for high stock levels in the run-up to Christmas triggers an increase in demand for pallets. Now, the prices of pallets are also going up because timber costs more. Brambles provided a trading update yesterday and said sales revenue was up 11% last quarter. Brambles, Michael, has 345 million pallets, crates and containers across 60 countries. I think that's amazing.
That's an extraordinary stat.
Sure is.
Speaking of numbers, Sean, terrible segue, I know, but let me go with it. The Financial Review's annual accounting firm survey has shown 75% of firms are struggling to recruit and retain staff. Particularly, there's a shortage of auditors. Now, accountants get paid pretty well, and there's a shortage of skilled workers in the sector. So if you like maths and you like business, and I'm tipping some of our listeners do, it's not a bad industry to be in. Now, what's the key overseas news this morning, Sean?
New Zealand's reported its largest daily number of COVID cases since the Delta outbreak began. There were 94 new infections yesterday, taking the total during the current outbreak to almost 2,100. There have been 28 deaths in New Zealand. Singapore has launched quarantine-free travel to 8 countries, including the United Kingdom, US, France, Italy, the Netherlands and Canada. It's already got similar arrangements with Germany and South Korea. Let's hope Australia's next, Michael.
Yeah, absolutely.
And one thing about COVID and Donald Trump, they were great for news channels, but with the coronavirus settling somewhat in the US and Joe Biden, a more sensible president, shall we say, US media groups have suffered a huge drop in audience numbers. Primetime ratings for cable television news networks CNN and MSNBC are down more than 50% on a year ago.
That is incredible. That's an enormous drop.
50%.
Well, we certainly saw in Australia the ratings for news programs, particularly TV and radio, certainly shot up during lockdowns. So clearly that's a worldwide trend.
Yes, it is.
Wow. All right, up next is the Daily Interview, and today you're speaking to Duncan Hogg from EY on mergers and acquisition activity.
I am. Mergers and acquisition, initial public offerings. There's plenty of those going on in the market at the moment. Good time to be an advisor, and Duncan is right across it.
Yeah, it's a great chat, that one. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Wednesday, the 20th of October, 2021. Make sure you're following the podcast. Join us online, of course, at Twitter, LinkedIn, Facebook, and sign up for our free daily newsletter at fearandgreed.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.